The IRS isn't all bad. I know we fear the reaper, but the IRS is not all bad. They've actually designed the tax code to benefit people like us. Most of you guys may not know this, but about 90% of the tax code, which that's a fair amount, is all about how you can avoid paying taxes. Only like 5 to 10% of it is all the reasons why you have to pay taxes. But for business owners like us, you don't have to pay. They actually incentivize you. And you guys know this probably in your standard practice of business. You've got expenses for food and taking clients out. You got expenses towards your car. You got your home office expense. You got all the marketing material that you spend in your business. You know, pretty much anything and everything surrounding the performance of your business. Payroll taxes, you name it, right? They are incentivizing us and saying, listen, don't pay tax on the top line revenue. You can just pay tax after all those expenses, which for small business owners is great, right? If you think compared to a W-2 employee, they pay taxes on the top line and taxes get taken out right away. But for small business owners, we pay taxes on what's left over. So like I said, not all bad, but we still got to pay taxes. And if you have a very profitable real estate business like myself and a lot of others, like that can be a big check. And I'm talking hundreds of thousands of dollars that you're going to have to pay the IRS. And especially for me, I'm in California, huge state tax as well. So at one point in time, a few years ago, I was looking at a tax bill of almost 50% of my net profit. I was like, you gotta be freaking kidding me. I gotta give half away to the government. But then I uncovered a secret, how not to pay taxes. So the mother of all write-offs, folks, if you learn nothing else from this, understand the mother of all write-off are actually not expenses, but depreciation. Depreciation is the mother of all tax write-offs because you don't pay taxes on it. But if you go out to finance a car, finance a house, or get a business line of credit, they actually don't count that as an expense. They bring that back in as income, so you still look like you're making a ton of money, but you get this huge tax break for depreciation. So being in the real estate business, we can qualify as what's known as a real estate professional. Now, I'm not a tax accountant. I'm not a CPA. You need to seek the advice from your own CPA and tax accountant, but I can tell you that I personally qualify as a real estate professional, which I'm sure a lot of you can as well or will. But as a real estate professional, I'm able to take depreciation from my real estate and pull it into my earned income. Whereas most real estate investors, doctors, lawyers, CPAs, other people who are not full-time in real estate, they can't do that. So when they get depreciation against their residential rental real estate or their commercial rental real estate, they can only write it off against passive income. So that's a passive loss, a piece of rental real estate, and they can only use that depreciation loss against passive income. Well, if they don't have very much, they can only use so much of that depreciation. However, if you're a real estate professional, you can actually pull that passive loss over towards earn loss, like I do. So you can take it towards earn loss, or towards earned income. So whatever your real estate business is profiting, if you own residential real estate or commercial real estate that is used for rental purposes, you depreciate that, you pull it right over and you pay less taxes against your actual real estate business. So let me give you guys a quick example. I invest into an apartment with a bunch of other investors, and I'm considered what's known as a limited partner. So I write a check and I get paid every quarter. It's a great way of investing in real estate, but that's a whole nother topic. Now, so I get these checks, I get this cash flow coming in, and it's great. But what we do is we actually depreciate the commercial building. And so it's considered a commercial building. We depreciate it. And what we do is we escalate the depreciation of it using the Trump tax law. So you get all this bonus depreciation right at the beginning. So pretty much on average, for every $100,000 investment into this apartment, people are getting between 65 and 75% year one depreciation write-off. That's huge. Imagine net profiting out of your business $100,000 and only having to pay taxes on about 20 to 25% of that $100,000, which is like 20, 25 grand. That's a huge savings. So you make the investment into the apartment, you get this huge bonus depreciation write-off. And now, let's say in my state, if I netted $100,000 net profit in my real estate business, before I would have been paying $45,000 to $50,000 in what? Taxes. But now I take that 100,000, I make the investment into real estate, and my taxable income is now between 20 and 30,000, which is a huge difference. I'd only have to pay taxes of maybe $5,000 to $8,000 now. That's a huge and massive savings. By not making investments into real estate out of your real estate business, you're just giving the government money. Start paying yourself and earn generational wealth rather than paying the government. That's not even mentioning that when you cash out of the investment, right? When the apartment is sold, you're taxed on long-term capital gains, which is at a 15 to 20% range rather than what? Your 40 to 50% of earned income taxes. Now, I could go down a complete rabbit hole with this, break it all down for you guys, but that's way outside of the scope of today's video. What I wanted to cover with you guys is, listen, if you're paying a high tax bill, it doesn't have to be that way. We sell real estate to teach real estate and coach real estate to our agents and our staff members to ultimately invest in real estate. And if you do that and you practice that, you'll end up creating a real estate business that you'll never pay taxes against. It's a win-win. Hopefully you guys found this valuable. If you did, hit the button below, subscribe to our channel, and guess what, guys? I'll see you on the other side.